Hey guys, what's up? Alec back with the daily stock market, and look at that, a pretty flat day on the stock market overall on Friday for the S&P 500, for the Nasdaq, and even for a lot of individual stocks also not making much movements. Now, in this video, it's going to be a very exciting video because we have big earnings coming up this week from Amazon, Meta, Microsoft, and other huge big tech companies. So let's just dive right into it. Here we have the earnings calendar pulled up, and look how crazy it looks and how many different big tech companies are reporting. This is one of the busiest earning weeks going on. So now that you have an overview, let's zoom in. Now, Monday is already out of the question because you would have had to buy puts or calls the day before, which would have been Friday. So let's go ahead and direct our attention to Tuesday before the open. We have Verizon Wireless reporting. We have UPS, GM, McDonald's, 3M, Pepsi, and Spotify all reporting before the open on Tuesday. After the close Tuesday, we have Microsoft, Alphabet, which is Google, Enphase Energy, Visa, Chipotle. So needless to say, Tuesday is one of the most action-packed days of the whole trading week. Okay, so moving on over to Wednesday before the open, we have Boeing, Hilton, ADP, and then after the close, we have Meta or Facebook, Roku, Teladoc, which are big movers. So we could see Teladoc and Roku moving double digits on earnings. Thursday before open, we have American Airlines, Caterpillar, Valero, Southwest, MasterCard. And then after the close, we have Amazon, Intel, Snapchat, which is a huge mover. Remember, they typically move 20%, 30% after hours after they report earnings. So they're going to be a good one to be drawing your attention to. We also have Cloudflare. We have United States Steel, USS. We have Pinterest. And then Friday, before open, we have the oil companies reporting. Remember, before the open, we have Valero, okay, which is an oil company. So that could be a little bit of an indicator on how Friday before the open is going to go with ExxonMobil, Chevron, and some of the other oil companies. Okay, so the first stock that we have to talk about is Microsoft, sitting at $285 per share. Okay, in the last month, we see them up 4.4%, and in the last 3 months, they're up 18%. Okay, so the last time they reported earnings, they were closer to $250 per share, and they've rose 18% since then. Now, if we scroll down, we can see the market cap is 2.1 trillion, making them one of the largest companies in the entire stock market. We have a PE ratio of 31, by the way, implying they are a little bit overvalued to the rest of the S&P 500, but Microsoft has a moat where they deserve a 31 PE ratio, in my opinion. Now, they're also a dividend stock at 0.9. All right, and remember, they're reporting on 4/25 after hours. On earnings, we've seen Microsoft in the past beat 3 out of 4. The only miss was Q4 2022, and that was a miss by a large amount. Okay, we can see that the EPS is trending downward the last 3 quarters, with expected coming in at 2.23%. So there is a good chance that Microsoft is going to be beating on EPS. Now, here we see a great article stating Microsoft earnings preview. Microsoft stock likely to trade higher due to strong fiscal year 2023 Q3 results, with revenues and earnings beat expectations. As we scroll down, we can see that Microsoft's quarterly revenue is increasing overall from 2021, going from 41.7 all the way to 54. Okay, and this is in billions, by the way. Microsoft quarterly EPS also increasing quarter over quarter, and the last 4 quarters specifically increasing steadily. Microsoft quarterly stock price, as you can see from 2022 Q1, $305 per share. It's been on a downtrend overall, so it could be a good place to think about buying some shares. Let's go over some Microsoft earning key to watch, okay? Out of the 3 business divisions, the Intelligent Cloud department has become Microsoft's goldmine nowadays, contributing to 40% of the group's total revenue with sound and solid growth momentum. In the previous quarter, the cloud services revenue increased 18%, while the whole group's revenue only increased 2%. Okay, so that's a big thing to be watching if that's where not majority, but a large portion of their revenue is coming from, and a lot of where their revenue growth is coming from also. For the to be reported quarter for earnings, Microsoft anticipated revenues from the Intelligent Cloud will keep increasing at the pace of 17 to 19% to a range of 21.7 to 22 billion. However, Microsoft also flagged that Azure, the cloud computing platform which is one of the main engines of the cloud business, will slow down its growing speed by 4 or 5 percent points to near 30% in the fiscal third quarter, down from 46% in the same period last year. And remember, we also have an AI race going on, so better believe that's going to be mentioned at least a little bit in the earnings release. The battlefield for the AI race has been set up and the smoke is getting intense. Microsoft seemingly led the way for now thanks to shared commitment with OpenAI to build a generative AI system, ChatGPT, which has convinced the world in 2023 that AI will become the top layering of technology prompt, a new generation of platform shifting. Okay, and remember, Microsoft invested $10 billion for around 49% of the OpenAI. So they own a large percentage. And also, if we look at the share prices of the big tech stocks, by the way, we have Microsoft only up 19% year to date, with Apple up 33% year to date, Amazon up 20% year to date, Google only up 18% year to date, the lowest out of the bunch, and Meta Platforms is up 70% year to date, the highest out of the bunch. So that leads us over to Meta Platforms at $213 per share. And remember, they are reporting this week and they're up 52% in the last 3 months. They've been on an absolute tear at $88 per share in November, and they're up 134% from lows just in the span of around 6 months or less. As we scroll down, we can see that they will be reporting earnings on 4/26 after hours, April 26, and they on the last 3 out of 4 quarters they missed on EPS 3 times. If we scroll up, we can see the market cap is $552 billion. So they're significantly smaller than something like Microsoft, for example. Their PE ratio is still only 24, implying that they are around an average deal compared to the rest of the S&P 500. Meta has really lost its moat over the last few years, but overall, the business is safe and sound in my opinion, and I think that they can continue to grow their share price over the years. However, I think that you can get a better price over the coming months. Closer to $175 per share or under is definitely possible, and a lot better price in my opinion to be picking up some Meta Platform shares. Now, Meta Platforms is really setting the stage for the ad cycle because they are reporting before Snapchat. Okay, a quick summary on Meta Platforms' Q1 earnings report is more about solidifying its new course towards 3 things. One of the main ones is focusing on ad production innovation, not user product innovation. These cycles have been switched because of the headwinds, and something it needs to be focusing on for the long term is non-advertising product capable of generating revenue. I'll be focusing on these things and the timeline for them to be meaningful free cash flow and net income. Okay, to say Meta Platforms' Q1 earnings report is important would be an understatement. After 2 years of hectic guidance cuts to expenses and CapEx, the company should be finally settling into a new groove more aligned with the weak and negative revenue growth it has been experienced for the last 4 quarters. And while Q1 revenue is expected to be negative, it's about the rest of the year and how management expects the online ad industry to shape up. Lastly, with internal job cuts mostly complete and expenses and investments almost 4 months in the books for 2023, I'm looking for negative news to be out of the way and positive news to infiltrate their earnings call. Okay, so really we want to be paying attention to guidance. Remember, Snapchat is reporting after Meta. So let me start off by saying Meta isn't out of the woods yet, has plenty more to still prove. And the first quarter of the year doesn't make a trend after the pretty poor 2022. But if the narrative can shift from a gloomy ad market to a bottoming one, by that happening, we basically have to see very good guidance. That's what we really want to see, is great guidance on ads. Investors can put at least the last few several quarters behind them and look towards double-digit revenue growth once again. I think Meta Platforms is a great stock to be watching, but I'm not buying at these high of levels. I think it's a little bit inflated, and hopefully earnings can bring Meta Platforms back to reality, closer to $180 per share. I think that would be a healthy thing to see from the stock, and I think it's a probability that we can see it. But keep in mind, if they do put out great guidance, then the stock is just going to skyrocket like it has been. And the last stock that we're going to be talking about on this video that's reporting this week for earnings is Snapchat at $10 per share. And remember, this is a stock that can move quite a bit very fastly, especially when reporting earnings. However, in the last year, it's down 65% and has never bounced back. Okay, it was around $30 per share, and it's been sitting at this $10 per share for the last 8 months or more. You know, July was the last time it was really above $10 per share, and it was only sitting at $13, $15 per share back then. Okay, so Snapchat 2020 had a huge run up for over a year, 645% gain from $10 per share to $75 per share. So if we see Snapchat at all-time highs once again, closer to $70 per share, obviously that would be huge for investors, because that would be around a 700% gain on your money. Now, I'm not saying that could happen. I'm just saying if it did happen. Now, the market cap on this one significantly smaller than the rest in this video at $15 billion. The PE ratio is negative, so they're a negative earning company. And if we scroll down, we can see that their EPS is on the brink of profitability, which is a great thing to see in a company. And in the last 2 earnings, we've seen a surprise report and a beat on EPS coming from Snapchat. This was an interesting article. We saw Snapchat shares tumble 7% because of the new features, the AI features. If you guys use Snapchat, you've probably seen that My AI bot coming in trying to compete with ChatGPT. Unfortunately, it isn't as smart as a ChatGPT, and it seems like it's more of a conversational, trying to be your friend or something. Also, the upcoming Q1 earnings is going to be very volatile for the stock. Snapchat revealed new features for Snapchat's platform, including AI-generated images. Snapchat will release its first quarter financial results after the market close on Thursday, April 27th. So mark your calendars, because that's going to be a huge earnings there. The parent company of social media, Snapchat, tumbled 7% on Thursday, posting the second worst session in 2023, despite the company unveiling new partnerships this week, as well as a release as an AI feature on the platform. Wednesday, the company announced that it is adding the ability to create images through its artificial intelligence chatbot called My AI. The chatbot can now respond to users' communications with AI-generated images. My AI was developed using OpenAI's ChatGPT technology. Okay, so it's interesting that it was developed using the ChatGPT. It was initially made available for users who pay $3.99 a month for Snapchat's premium subscription, Snapchat Plus, which now has more than 3 million subscribers, by the way. However, the company revealed that the My AI will be available to all of its 750 million monthly active users, which is a huge, huge number for monthly active users. So Snapchat earnings is really a 50-50 if it's going to be trading up or down. But if you want to see exactly what I'm doing, what plays I'm taking, make sure you message me here on Instagram, where I list all my trades for all my members and students to follow along with, and signals that you can just follow along with. It's that easy. Now over 200,000 followers on Instagram, a huge milestone. So thank you guys for all the support you've been showing the page. Over 2,000 paid subscribers, 800 positive testimonials. So if you click on success number 8, read through some of these positive testimonials. Huge moves going on in the private group, over 51% gains, $1,900 being made, $490 being made, okay? That's a 544% gain. You start with $45 and you end with $580. That's what we're doing in the group. The gains are unbelievable. Another member with $7,850 made in the group. So if you want to be next up and if you want to make 2023 your year of stock market success, now's the time with the hot earnings week coming up and the hot summer coming up. Also, the excitement's going to be at an all-time high and stocks are going to be moving like crazy. So get in on the action. Message me here on Instagram. It's that easy. Thank you guys for all the love and support. Make sure you share this video with a friend if you think that they will like it also. And as long as you guys keep liking these videos, I'll keep making them for you guys. And until next time, remember, don't time the market, buy the market. Peace.